They say you can't go broke taking a profit, but is that always true? We're about to find out. Welcome to another edition of the McEnulty Method. I'm your host, Bill Vashwick, and I'm joined by financial experts Frank McEnulty and Colin Sorrells. We're here to give you all the tools you need to build a successful financial future. Gentlemen, welcome. How are you?
Great, Bill. How are you?
I'm good now. I might
Good.
have some PTSD when this episode's done.
Now, if you've been listening over the past couple of weeks, we've talked about how younger investors might view the stock market in 2023 and discuss some easy investing strategy you can employ yourselves. If you're curious about some of these strategies we discussed, you can either go back and listen to those episodes wherever you get your podcasts, or you can check out our YouTube channel, The McEnulty Method. Now, last week, we took a step back from general advice, and Frank, you shared a story with us focused on kind of spreading your risk and not taking chances just to avoid taxes. But this week, we have another story for you out there. And frankly, I'm dying to hear how Colin made 700% in one day and wished he hadn't. Colin, you've got to tell us.
Gladly. So this goes back to 2020 when the pandemic first hits, and I remember working. I'm working, my usual college job. You're in a restaurant, retail store, whatever, and we had a TV up, and it's just talking about the world's ending, the market's way down, and just this is the worst drop since 2008, and everybody's pulling all their money out, and I'm sitting there, no investing experience, but I'm like, even my philosophy of, well, I'm gonna buy now because either this is as good a deal as I'm gonna get, or it's gonna, if this really is the end of the world, then I don't need my money anyway, because I'll be fine. so I wanted to invest, and I had no idea. I never really ventured into trading platforms. Didn't know how to go about it. So when you don't know how to do something, every 20-year-old knows this. You look it up on YouTube. That's where you learn how to do everything. So I start doing some research on YouTube videos, and my roommate had mentioned, hey, there's this great trading platform, Robinhood. You don't have to pay anything. It's really easy. You just pick what you want to buy, and it's there. So, I started looking up videos, how to invest with Robinhood, and there's tons of them because, everybody's favorite, I said this, everybody fancied themselves an investor during the pandemic. So, I'm starting to look up videos, and all the ones getting views are these channels where they're talking about, this is the hot, they weren't all the same as far as companies, but this is the hot area. This week we're going to invest in, the gambling companies, and this week it's going to be airlines, and this week it's going to be the cruise line. And what everybody seemed to realize was, well, I'm not gonna buy shares of the stock. I'm gonna buy call options, right? And I don't want to, we're gonna have other episodes to get into the specifics of options, but very briefly, options are more volatile than stocks because you pay a price and you get, the equivalent of 100 stocks for a certain price. And call options in particular are based on, if you just take the call option, you're hoping the stock goes up. Well, in the some, as we get into May, June, everything's just going up, 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 up. So everybody's buying call options, and so of course I'm sitting there, listening to these videos, and they're posting them every day. This is, you got to get in on airlines this week, and I'm listening to them talk, and I'm like, yeah, that sounds like good logic. Airlines are opening up. It's gonna be big business this summer. That's good logic. I got talked into it, so I went out and I bought some call options on one of the major airlines. I think maybe American, Delta, I can't remember. Um, and it cost me about $100 to get this contract. And I had the contract, and I bought this Wednesday. Thursday it goes through the roof. And I'm like, yes, I'm going to sell this. Uh, Find out I can't sell it. So we talk about, sometimes maybe you want a financial advisor. Nobody told me there's this $25,000 liquidity rule. If you don't have 25,000 in your account, you have to wait. I think it's a certain amount of a couple of days or something before you can sell your position. So here I am with this call option that's up, 300%, and I can't sell it. So that was I don't think I got an ounce of sleep on Thursday night. I'm just like setting every alarm for, okay, market open 6 a.m. Friday. I got to sell this right when the market opens Friday. Friday comes and it's up even more. And so I did sell it and I made 700%. So it's so far great story, right? This is the one you go tell your friends about. I put in $100. I came away, I made $700 on this, in 2 days when you're in college and working for $15 an hour, And so I remember, telling my friends about this, and this is where, the wish you hadn't, because again, we're all in college, we're all making $15 an hour. We're working 30 hours a week to make $400, and now, oh, here's $700 in a day. Oh, you must be a genius. You must really know what you're doing. And so they kind of hype you up, hey, can you take my 500 and put it in? And you got to keep doing that. And so fortunately I didn't take their money, and we always joke now because it was like we would have lost all of it. But what you come to find out was when you just make moves like that and you don't understand, well, what's the risk of what I'm doing? What's the, does it make sense to do this? Is this just a trade? Do I really believe in this company? And 99% of the time, you're just making bad choices. But 1% of the time, hey, what do they say? A dead clock is right twice a day. So sometimes you get a little bit lucky. And unfortunately, if you get lucky on the first time, you think you know what you're doing, and you continue to chase, okay, I'm going to buy a call option on this stock, and I'm going to buy a call option on this stock. And how that one didn't work, but the next one will work. It's going to happen again. And so, you get a little caught up in that. And that's why I bring this story up as one where, maybe I would have liked a financial advisor who would have said, hey, you got lucky that it worked. Don't do it again. That's not how to make money at this long term, because I proceeded not only to lose the $700 I made, but then the original $500 I had put into the account. And so that was, a $1,200 loss. Again, college student making $15 an hour hurt quite a bit. And so that's my story. Fortunately, I unlike Frank, it was not in a tax advantaged account. So I got to write that off at tax season. But that's the story. And I think I wanted to tell it because of the point that, this isn't something, investing is not something you just go on YouTube and find out in 10 minutes. That doesn't make you an expert. And, sometimes it is good to seek, advice from people who have done it before, and not get a bunch of 20-year-olds with sheepthink that are like, we're going to jump on the hottest thing. And, it long-term will not work out.
Good. Well, I was thinking about your story, Colin. It's like, okay, what can I? So if you want to be a race car driver, okay, probably best not to jump into the, 700 horsepower Indy car the first time on the track. And options are risky. Like you said, you're playing with a lot more leverage. You're making a bet on the direction the stock's going to move. You're not buying the stock. You're not buying any value. You're buying the right to do something in the future if it goes in your direction. So and I'm sure, was this through a Robinhood account?
Yes, it was.
Yes. And so Robinhood scares me that way. And yes, I know if you're an adult, you can do whatever you want. It's your money, right? But they let you do whatever you want. A Schwab account or something like that, you open a Schwab account, they're not going to let you trade options. They're just not, until you've been doing things for a while, because they know what's going to happen.
No, I think it's funny you bring that up just real quick, because one thing I will say before I trade, I went from never having an investment account, never doing anything, all my money just sitting in a savings account in a bank, to I have a brokerage account. I clicked on a drop down that said, well, what's your experience with options? And I said, average. I'm not going to tell them I'm a beginner. I'll just say average, And I think that was it. So 2 clicks, and now I've got a brokerage account, and I can trade whatever I want. It could be any stock, it could be any option. I can take however many positions I want. It's okay. So you're absolutely right. Yeah.
And there's nothing wrong with trading options. People make money all the time trading options. People that trade options make money trading options all the time. They understand them. They follow the market. It's when you first start out investing, you probably not the best idea to jump into some of the most risky potential things you can do, which is options. Get in, learn a little. It's your money. Sure, you can lose it. And I know it's boring just to buy, Microsoft and see what it does for the next 6 months. But at the end of the 6 months, I guarantee you're not going to lose all your money. If you do, like Colin said, it doesn't matter. We don't need money anyways. If Microsoft goes out of business, so we have far more problems. But yeah, you went straight into being a trader, not an investor. Options is trading, not investing.
Yeah.
Anything that doesn't have an underlying value, a stock to it, is trading, and that's options and anything that has the derivative word around it. The people.
But it sounds like it's almost like playing roulette, but instead of red or black, it's up or down that you're betting on.
Yeah, and you're betting on one stock at a time, and options expire. They just go away. So if you don't do it right, and even though you haven't really lost money, hasn't gone up, hasn't gone down, all of a sudden, if you're not real savvy, you wake up one day and go, wait, what happened to my option? It's gone. Because they just expire and go away. You're buying in the case of a call option, you're buying the right to buy a stock at a certain price by a certain date. Like Colin said, we'll go far more into this later, but it's much riskier than just buying the stock. And yes, it can supercharge your investment. You pay $1 for an option, and that's another thing Colin mentioned that didn't really pop up. You buy one option, that's an option for 100 shares of stock. So if the option it's the option price per share. So if you go, oh, look, it's $1, I can buy an option for $1. No, you just bought an option for $100. Yeah.
All right.
This is just quickly, options do have their place, but Frank makes the excellent point. You don't do if you've been driving a Honda Civic everywhere, you don't jump into the brand new Ferrari on the lot and just go, So if you have very limited experience in this, that's not where you start, I mean, people go to school to study whole years just to learn options. So it's a complicated thing. And yeah, if you just take call options like all the YouTubers were doing and you listen to them, you might as well go down to your local casino, your horse track, and just put your money there, because your odds, as Frank always says, you don't know if it's going up today or tomorrow. So,
well, and remember, if you're buying an option, that means somebody's selling the option. And odds are the person selling the option is somebody who does this for a living. So you're already behind the 8 ball. It's like, and things, especially like in the options market. We were in class today for my international finance class where we always trade currencies. We've got virtual accounts, we trade currencies. And at the beginning of class, our Mexican peso purchase was up. We had gone long on the Mexican peso and it was up. And it was 11:05, I remember exactly. I asked the class, I said, should we sell? Or I said, when does the Fed talk? And they said, oh, they're talking now. I said, okay, Or do you want to wait until after the Fed talks to see what's going to happen? Well, I can tell you what happened. They said that it seemed like they're backing off on future interest rates, which meant the dollar went down and the peso went like that. Every foreign currency went straight up when that came out. And it could have gone just as badly the other way. If they would have said, well, we don't think that we've got this inflation thing tamed yet. And it would have gone straight down. Yeah. So the riskier the investment, the faster it moves up and down.
All right. And Colin, was a heck of a story. And I think next time you guys are both going to share more of the dangers of investing in options and other things to watch out for as a new investor when we get together. I'm looking forward to that. And for you out there, thank you for listening. Thanks for joining us. And we hope you enjoyed this episode. If you'd like to learn more, check out our YouTube channel at the McEnulty Method. And thank you, guys. We'll see you next time.